Bitcoin has plummeted nearly 4% in just hours, hitting its lowest level since February. This alarming shift raises questions about the stability of the entire cryptocurrency market. Here's everything you need to know about this unexpected downturn and its implications. Looking ahead, the future of Bitcoin's price will largely depend on its ability to stabilize above critical support levels. Recently, Bitcoin experienced significant volatility, with its price fluctuating dramatically within a short time frame. This fluctuation has been attributed to a combination of market sentiment, regulatory news, and macroeconomic factors. Analysts are closely monitoring the market, watching for signs of buyer interest that could indicate a potential reversal. Historically, Bitcoin has demonstrated resilience, recovering from previous downturns. However, this latest volatility has raised concerns among investors about the sustainability of its recovery. If buyers step in effectively, this situation may be viewed as a leverage reset, allowing the market to regain stability. Conversely, if Bitcoin fails to hold above these support zones, further liquidations could occur, dragging altcoins down with it, especially those that had previously outperformed. This interconnectedness among cryptocurrencies underscores the fragility of the market and raises questions about the broader implications for investor confidence. Experts have differing predictions about the immediate future. Some suggest a possible bounce back if confidence returns, while others warn that the bearish sentiment may persist for the coming weeks. The recent regulatory scrutiny faced by cryptocurrencies adds another layer of complexity to the situation, as governments worldwide grapple with how to approach digital assets. In the immediate term, traders should pay attention to Bitcoin's trading patterns and any emerging news that could affect market sentiment. With institutional interest fluctuating and macroeconomic factors at play, the stakes are high. As the situation develops, a critical question remains: will Bitcoin find the strength to regain its footing, or are we witnessing the beginning of a more profound correction in the cryptocurrency market? The coming weeks will be crucial in determining Bitcoin's trajectory and the health of the broader cryptocurrency ecosystem. The recent plunge in Bitcoin's price can be traced back to a combination of factors that have been developing over weeks and months. Analysts note that the sell-off is not merely a sudden market reaction, but rather a culmination of forced selling and macroeconomic caution that has been building within the cryptocurrency ecosystem. Over the past several weeks, traders have exhibited increasing bearish sentiment, particularly following the Federal Reserve's recent decisions on monetary policy. The Fed's signals regarding interest rate hikes have raised expectations of tighter monetary conditions, leading to concerns about the sustainability of high-risk assets like Bitcoin. Additionally, Bitcoin's recent performance has faced pressure from significant support levels being tested, prompting further selling as traders reacted to the market's volatility. Historical parallels can be drawn to previous market corrections, where Bitcoin's price faced similar pressures but managed to recover after a period of consolidation. However, the current environment is amplified by external factors, such as geopolitical tensions and inflationary pressures, which are adding to the uncertainty in both crypto and traditional markets. The motivations of key players in the market are becoming clearer as they navigate the challenging landscape shaped by both internal crypto dynamics and broader economic concerns. The impact of this downturn is significant, as it affects not only individual investors, but also the larger cryptocurrency market ecosystem. Market confidence is shaken, and institutional investors may reconsider their exposure to Bitcoin and other cryptocurrencies. Looking ahead, analysts suggest that a sustained recovery may depend on macroeconomic stabilization and renewed investor interest. As volatility persists, the future trajectory of Bitcoin will likely hinge on both regulatory developments and the global economic landscape, making it essential for investors to stay informed. The recent decline in Bitcoin's value has sent shockwaves through the cryptocurrency market, prompting a critical examination of its implications. Bitcoin, often seen as the bellwether for digital currencies, has experienced a notable drop in price, raising alarms among investors and market analysts alike. This downturn is particularly concerning because Bitcoin's performance significantly influences market sentiment. As it weakens, altcoins, other cryptocurrencies that typically follow Bitcoin's lead, also suffer from diminished value. Investors, fearing further losses, are increasingly opting to liquidate their positions, leading to a wave of forced selling. This trend is especially pronounced among those who have taken leveraged positions, amplifying their potential losses. The context surrounding this decline is multifaceted. It coincides with rising geopolitical tensions, including conflicts in Eastern Europe and trade disputes that have shaken investor confidence. Additionally, the anticipation of tighter monetary policy from central banks worldwide aimed at combating inflation has created an environment of uncertainty. As risk appetite diminishes, traders are retreating from cryptocurrencies and reallocating funds into cash or safer assets. This behavior underscores the fragile nature of cryptocurrency markets, which are often swayed by broader economic conditions and global events. The impact of Bitcoin's decline extends beyond immediate financial losses for individual traders. Institutional investors, who have increasingly entered the cryptocurrency space, are now reevaluating their strategies. The correlation between Bitcoin's performance and traditional markets raises questions about the asset's role as a hedge against economic downturns. For the average person, this situation illustrates how intertwined cryptocurrency markets are with global economic dynamics, highlighting the risks associated with speculative investments and the potential for significant financial repercussions. Looking ahead, the outlook for Bitcoin remains uncertain. Analysts suggest that its ability to recover will depend on various factors, including investor sentiment, regulatory developments, and macroeconomic conditions. If Bitcoin can stabilize and regain investor confidence, it may set the stage for a broader recovery in the cryptocurrency market. Conversely, if the current trends continue, we may see further capital flight and a prolonged period of volatility. The coming weeks will be crucial in determining whether Bitcoin can reclaim its status as a leading asset or if it will continue to face formidable challenges that hinder its growth. On June 21, 2026, Bitcoin's price experienced a sharp decline, dropping approximately 4% to $64,721. This significant decrease marks the cryptocurrency's lowest value since February 28th of this year. As trading progressed, Bitcoin fell further, reaching around $62,400, causing alarm among investors and analysts alike. This sudden downturn is notable not only for its speed, but also for the broader impact it has had on the cryptocurrency market as a whole. Analysts have attributed this decline to multiple factors, including option expiry volatility, which often leads to rapid price fluctuations, forced liquidations of long positions, and renewed concerns regarding corporate demand for Bitcoin. Bitcoin, being the benchmark asset in the crypto space, serves as a barometer for market sentiment. Its rapid descent has instigated a risk-off mood across the market, leading to a general cooling of sentiment among investors. This decline has escalated fears of a deeper correction, as capital flows tend to shift from higher-risk altcoins back into cash or more defensive positions. The situation is particularly striking because it highlights a rare convergence of internal market pressures and external macroeconomic factors, distinguishing it from previous price fluctuations. In the wake of this decline, alternative cryptocurrencies are also feeling the pressure, with many experiencing correlated drops in value. The panic among retail and institutional investors has resulted in increased selling activity, further exacerbating the downturn. Historically, such market corrections can lead to a prolonged period of consolidation where prices stabilize at lower levels. The current climate is heightened by ongoing discussions surrounding regulatory frameworks that could impact the entire cryptocurrency ecosystem. Looking ahead, analysts are divided on Bitcoin's potential recovery trajectory. Some believe that the current dip may present a buying opportunity for long-term investors, while others caution that without a significant uptick in institutional demand or favorable regulatory developments, the market could face additional challenges. As traders adjust their strategies in response to this volatility, the focus remains on upcoming economic indicators and corporate earnings reports. These forthcoming events will be critical as they could either bolster investor confidence or deepen the current market malaise. The next few weeks will likely be pivotal in determining Bitcoin's future direction. As we continue to monitor Bitcoin's trajectory, will it stabilize or succumb to a deeper correction? Share your predictions in the comments below, and don't forget to subscribe for daily deep dives into the world of cryptocurrency.